Good morning, traders, from each and every part that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets. Now, this is going to be a pre-recorded YouTube video, to mean you could access this YouTube video. Good morning, Cliffin. Good morning, Alvin. You could access this YouTube video on our YouTube channel at HFM Kenya for your own review and for you to build enough muscle memory to see we repeat the same thing the same time and you see the results of this. Visit our YouTube channel at HFM Kenya. From everywhere you're joining this from, for our brothers in Tanzania, Karibuni, Uganda, and the rest of East Africa. So I'll give a moment of silence, a 3-second moment of silence for us to go and click on the notification button, subscribe and like, and possibly share also, so that we improve on our algorithms. And it is our commitment that we are going to get better to make this financial journey literacy even much more endowed. Very nice. Now, with that out of the way, we begin with fundamental analysis. We look at the geopolitical and economic forces moving the markets. And like it has been our custom here on the Daily Morning Market Call, we look at trending topics that would have an effect on the market, like we have done in the past. So the first one is, we see news coming from the Eurozone. The Eurozone, remember, is an economic bloc in the in Europe, which composed of 20 countries using one medium of exchange, which is the euro. Okay, so we have economic data coming from there. That's our first highlight. The economic data projected coming out negative, which weakens the euro. That is for the joint economic bloc. We also had the day before yesterday GDP numbers coming from Germany. We also had Germany Consumer Climatic Index dropping. So we see a pile of negative data from the United States, from Europe, beg your pardon, which weakens the euro in its essence as a medium of exchange. That's highlight number one. Highlight number two, we also see gold reach its all-time high, breaking the all-time high in history, like we observed a couple of times last year. So it has done it the first time this year. Quite timely as we end the first month of the year, walking into the rest of the months, 11 counting to December. Now, those are our two key highlights. Now let's go to the charts and see that this being interpreted in real-time data. So, number one, we bring out the currency Euro USD. Euro USD is right here, not quite visible, but here we are. So, overall, we were in a downward trend, giving traders and investors opportunities to get in for sales, breaking key levels, which could be our areas of interest to enter from. And this would be applicable to all the four types of traders: scalpers, day traders, swing traders, and position traders. And we had a slight change of character from this long-term downtrend to an uptrend. This was brought about by the positive numbers, which producer manufacturing index, which came out earlier in the week, late last week, in fact, which caused this slight change of character from this long downtrend to this an uptrend. Now we see data coming from euro, which is negative, both as an economic bloc and from Germany. And remember, out of the 20 countries, Germany, France, and Italy are considered to be more stronger than the rest 17. Okay, they controlled 40% of the GDP in that part of the world, so they are quite considerate. So as much as we are paying attention to other countries, we pay much key attention to these three countries, and Germany happens to be one of them. So we see price beginning to print down, or bearish if you may like. Going to a lower time frame, the 4 hour, lower than the daily, to see it even much more clearly. Would want to see the lows to be taken out to support this narrative. For this key level to be tested, so we want to see major lows being taken out. We want to see this low being taken out. Some traders would call this lows liquidity. Okay, in market structure, keep it as simple as possible. So what I'm saying is, when price starts printing bearish because of the negative data which is coming from the euro, is giving us a symbol that the US dollar might recover from this uptrend that had started. What would that mean? Price retracing to the downside now. We want to see the lows being taken out to confirm that, right? This goes to the 4 types of traders. Now shift to gold. Let's see from the daily time frame clearly. From the daily time frame, we can see that we broke out the all-time high right here with quite a big candle, or the Marabuzu Japanese candlestick, if you may like, which shows buying pressure. This could be accounted to the excitement around the new president of the United States, Donald Trump, the sentiments by the president of Russia, Vladimir Putin, on geopolitical activities that are happening. Also, the trade warfares that have been escalated again by Donald Trump as he tries to secure United States interest. Remember, his leadership style is quite different. This causing tension, which makes gold to trend in an uptrend. Would like to see this continue. If I would go to a much more lower time frame, in fact, like the 1 hour, we see right now price is consolidating, which means it's neither creating higher highs or lower highs. We want to see price print to the upside to confirm these buyers. However, for safe entries, we would wait for price to retrace into discount for us to continue buying. But overall, we know that we're in a bullish trajectory, and as a matter of fact, history has been made again where gold takes out its all-time high at we mark the all-time high, which was here at 2786.19. All right, what a beautiful day. So as a call to action, in the instance that you are getting to familiarize yourself with the financial market, may you be a novice or beginner trader, may you be an intermediary who wants to keep adding the experience and insights on them, or about the financial market, kindly get in touch with your mentor who has led you to this chat box to allow you learn more and expose you to much more information. Or visit hfm.com, our website at hfm.com. Just let me demonstrate that in a short time. This is it. Visit our website at hfm.com. Attempt to register for an account, and you fill your details. Our experts are going to get to contact you for you to register an account and get familiar with the financial market. As a disclaimer also, this by any chance is not financial advice. This is meant purely for educational purposes. Kindly do your due diligence. And how do you do that? By observing risk management after education, so that you participate consciously in the financial markets with the aim of making possible profit. Now, see you guys on Monday to keep reviewing the market and looking for possible opportunities. Until then, God bless and take care. Thank you.